Hey there! If you're working in commercial real estate, there's one thing you cannot afford to skip: understanding your market. Not at a high level, not by headlines. I'm talking about detailed, real-time, boots-on-the-ground market knowledge. Because let's be honest, if you don't know the real story behind your market, you're not negotiating. You're reacting. Or worse, you're guessing. Today, I'm going to break down what market data points actually matter, how to interpret those trends, and how to use them when speaking to tenants, owners, and investors. Let's get into it. First off, what market data actually matters? It's not just price per square foot. That's surface level. You need to be tracking a few core metrics consistently. These include vacancy and availability rates. This tells you the basic supply and demand story. But make sure you break this down by asset class and submarket. A 10% vacancy rate in Inland Empire Industrial is very different from 10% in Class B suburban office. Lease comps. You want signed deals, not just listings. There's a big difference between what landlords want and what tenants actually agree to. Look for term length, rent, concessions, and use type. Sales comps. Same rule here. Go for actual transactions. Look at sale price, cap rate, buyer profile, and time on market. If nothing's trading, that tells a story too. Absorption and net demand. Are tenants growing or shrinking? Are more square feet being leased or vacated? This gives you trend lines beyond a static point in time stat. Pipeline and development. What's under construction? What's been entitled? An oversupply wave can crush rents, even in a high-demand market. Now, this is where most people stop. They pull these numbers and assume they've done their homework. But raw data isn't strategy. You've got to interpret the trend. That's where the leverage is. For example, if flex industrial space has gone from 4% to 9% vacancy in the last 2 quarters, that's a signal. It means something shifted. Maybe new supply just came online. Maybe tenants are downsizing. Maybe there's a pricing mismatch. You don't just observe that stat. You use it to ask better questions and make better decisions. Now let's talk about how to use this intel when talking to tenants. Your job isn't to just find space. It's to help them make smarter decisions and negotiate from a position of strength. Let's say you're representing a small business looking for 3,000 square feet of office in a suburban market. You come in knowing vacancies at a 5-year high, multiple listings in that size range have been sitting for 90 days. Recent leases were signed at 10% below asking with 6 months of free rent. That's leverage. You can say, here's the reality of this market. You don't need to rush. And you absolutely shouldn't pay full asking. The tenant sees you as a strategic advisor, not just a broker forwarding listings. Same logic applies if you're a landlord rep. If you know market rents are slipping, don't just bury your head in the sand. Prep your owner with the facts so they can price realistically and avoid long vacancies. Now flip it. What about when you're talking to owners and investors? They don't care about fluff. They care about performance relative to the market. Use data to create a scorecard. Is their building's occupancy rate above or below the submarket average? Are they hitting or missing the average lease rate? Are they capturing tenant demand or missing it because of outdated floor plans or lack of concessions? You're not just reporting. You're diagnosing. And when you do that, you stop being seen as someone trying to sell them something, and you start being viewed as someone who protects their asset value. That's a major shift. But here's the catch, and this is critical. Most people are quoting the wrong data, or they're quoting the right data without context. Here are a few traps to avoid. Number 1, don't rely on asking rents pulled from public listings like LoopNet. These are often stale or inflated. Signed leases tell the real story. Number 2, don't quote national trends when you're working local deals. Office is down nationwide doesn't help someone who owns a stabilized building in Riverside. And number 3, don't drop stats without a takeaway. Saying vacancy is up doesn't matter unless you explain what that means for pricing, timing, or positioning. Always connect the dots between the data and the action. So let's wrap with a simple checklist you can use. If you want to understand your market and use that understanding in client conversations, focus on signed lease comps, not just listings, vacancy trends and absorption over time, sale comps and cap rates by product type, pipeline construction and looming supply shifts. And above all, use that data to tell a story, not just recite numbers. That's how you go from just another person in CRE to someone your clients actually trust. And that trust? That's what leads to repeat deals, stronger referrals, and bigger opportunities. Thanks for listening.